Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES failed up at that 54 half resistance, and we started seeing some accelerated selling overnight once we broke below the previous VPOC of 45 half. At this point, heading into the open, the sellers are in firm control. The market has already tested the 25 to 27 support, and right now we're getting a bit of a bounce off of that zone. And you can see that on the larger time frames, the market is essentially stuck in this range so far. And on the downside, if we break 25, that would bring the 16 quarter to 19 quarter zone into play, and it would be a break of this 3 or 4 day balance essentially from last week. And 16 quarter to 19 quarter is still a spot where buyers can be active first test. It's also a spot where ES would be pretty oversold and extended to the downside. So even though 25 to 27 can break, these next zones, 16 quarter, 19 quarter, can still attract responsive buyers for at least a bounce. It doesn't mean that it has to be an all-out reversal though. But these are areas where buyers can be active, and they can also be used as targets on the downside for shorting the market. On the upside, 33.75 to 35.75 is the immediate resistance, and above that we have initial resistance zone at 37.5 to 40. Both of those are spots where sellers can be active, where shorts can enter the market pretty aggressively. In the event of a move beyond 40, the main resistance would be 43.5 to 45.5, but given the level of selling that we've seen in this market overnight on relatively high volume, ideally the market should not retrace all the way back up to 43.5 to 45.5. Usually when you get this level of selling, that first resistance zone, 33.75 to 35.75, ends up capping the upside, at least in the short term. And pop up to 37.5 to 40 would provide ideal location to short the market and look for a retest of 25 to 27. And right now the door is open for a break below that zone. And if we do break below 25, then we know that we can accelerate down into the 16 quarter to 19 quarter. And in the event of some really strong liquidation, the market can even go down to 05 to 07, but that would be quite extended on the downside. But given the recent volatility that we've seen in the market, this month, it's certainly possible to even go down to 05 to 07, and then that's the spot where the selling could shut off and we could get a bigger bounce and an intraday reversal potentially. So right now the immediate bias is on the short side, but with the understanding that the market is bouncing off of the short-term balance area low. So 33.75 to 35.75 can be tagged here, and even 37.5 to 40 is potentially in play. But again, if this is a very weak market, then ideally you want to see a failure at 33.75 to 35.75, in this area somewhere, and worst case 37.5 to 40. If you start going beyond there, it doesn't mean that the buyers are now back in firm control. It would simply be a kind of an exhaustion move into the 43.5 to 45.5 zone, and then that can still be used as good location to enter short, because even if 25 to 27 is going to hold, let's say, as the short-term balance area low, we're still likely to balance below the 43.5 to 45.5. So even if buyers aggressively step in here, I don't see an all-out reversal taking place. The maximum I see on the day time frame is this 43.5 to 45.5 zone, and that's best case scenario for buyers. In my opinion, the pre-market resistance and initial resistance zones are going to be hurdles on the upside. And on the downside, we've tested the 25-27 already, so if we head back down there, it's not going to be as strong of a zone anymore, and that can give way for a move down to 16 quarter to 19 quarter, and potentially even lower. But on a break below 25, this zone would very much be the downside objective. And then if this zone gives away, then 05 to 07 is really the next key spot. 10 to 12, buyers can be active. It's still a valid support zone, but really the next major zone below 16 quarter would be 05 to 07. So those are really the main thoughts heading into the open. Just keep in mind that the market has already sold off quite a bit. So, to short the market at this point, pre-market resistance is really the ideal spot, even for aggressive sellers, right? And 37.5 to 40 would be the conservative spot, but a lot of times the market doesn't get to the conservative spot when there's a lot of directional conviction. So today, the primary focus heading into the open is going to be on the short side. We're going to be very cautious on the long side unless we start seeing some very clear signs that buyers are really, stepping on the gas here. And that would be apparent via a rising advanced decline line, via a strong NYSE tick. But that's not the expectation, but it's something that we should be open to if that scenario does indeed play out. But right now, the primary focus is going to be on the short side, cautious on any long setups. Idea being that we can quite easily go down to that 16 quarter, 19 quarter, potentially 05 to 07. So those are the main thoughts. Let's see, whether sellers can maintain control here off the open, and we'll take it from there.